good morning, and thank you so much for joining us for day two of the Jamaica Stock Exchange's Regional Investments and Capital Markets Conference. I'm Rochelle Moncrief. This morning's focus is on government priorities for capital market development. The session will be moderated by the CEO of NCB Capital Markets, Angus Young, and will feature the Minister of Finance and the Public Service, the Honorable Favour Williams. Stay with us. It's day two of the JSE conference, live on CBX.
All the way from the United States to be here. Greg and his team have been here for many, many years through good times and bad. And I just want you to acknowledge them with a round of applause. And I must acknowledge my husband as well, Leo Williams. He's always thinking of ways to create new capital market products, always. So let me start by saying, well, acknowledging as well all the distinguished ladies and gentlemen who are here. 21 years in the life of anything is meaningful. That's how long the JSE has been hosting its Regional Investments and Capital Markets Conference. And the Jamaica Stock Exchange has not wavered from its mission to mobilize capital, encourage regional investment, and discuss key issues for the development of the capital markets in Jamaica and the wider Caribbean. I am sure that you will agree with me that this conference is a symbol of resilience. Only a fraction of events or businesses survive for over 2 decades. Reaching this point demonstrates that the Jamaica Stock Exchange Conference has institutional stability and the ability to adapt to shifting global conditions. This conference also has legacy, influence, and what I'm calling identity capital. Without a doubt, the JSE conference has an established platform to influence national policy, advocate for small to medium enterprises, and address global issues like climate risk through the lens of finance. At its core, the Jamaica Stock Exchange, the Regional Investments and Capital Markets Conference since 2006 serves to mobilize capital, encourage regional investments, and discuss key issues for the development of the capital markets in Jamaica and the wider Caribbean. And I believe Dr. Marlene Street Forrest, then General Manager and later Managing Director, who spearheaded the launch and guided its growth for 20 years before retiring last year, deserves our respect, and I'd like her to take a bow. So let me make a declaration. Beyond being the Minister of Finance and the Public Service here in Jamaica, as you heard Angus say, I'm also a Chartered Financial Analyst, or CFA. And I know that this morning I'm among friends here because there are many CFAs in Jamaica. And I want to acknowledge you this morning for stepping out boldly and putting in the work in order to achieve this globally recognized professional credential. And for those of you who don't know, it takes at least 3 years to attain this designation. The financial markets in Jamaica are stronger, for having as many CFAs as we do have now. Congratulations to all of you who are CFA holders. So the topic, government priorities to deepen capital market development, could not have been more apt. It was this government that passed legislation that gave birth to the junior market. Many years later, we know how successful the junior market has been, moving from less than 100,000 units valued at Jamaican $1.5 million, with a mere 14 transactions in 2009, to experiencing a record in 2022, a year in which volume traded amounted to over 4.7 billion units, valued at over $16.3 billion, over 234,000 transactions. As you know, the companies listed include finance, manufacturing and distribution, retail services, education and leisure. There are many indicators as to the success of the junior market. And for that, we should many times reflect on that accomplishment. We didn't stop there, though. In March of 2025, there was a successful capital raising of Trans Jamaica, when the government of Jamaica sold its remaining 20% stake and raised over $12 billion from about 22,000 applications. The company was valued at 60 billion Jamaican then. Barely a year later, that same company is valued at approximately 70.5 billion Jamaican dollars. Our markets work. Yes. And I want to say, if you'll allow me, if you look at its financial highlights, that's Trans Jamaica, it is showing strong growth for the 9 months ending September 30, 2025. Trans Jamaica reported a 15% increase in revenues to US almost $70 million and a 28% increase in net profit. The company maintains a high dividend yield, recently reported at 6.24%. And in terms of recent development, the company managed the infrastructure recovery following Hurricane Melissa, and it is expanding the network by 50%. Of course, I can't stand here and give you investment advice. I can only repeat the facts about the company. But if you find the facts interesting and you make a decision, you did it all on your own. We didn't stop there. In July of 2025, only 9 months at the Ministry of Finance and the Public Service. This time around, I led the team from the ministry, and along with our investment advisor, Citi, I think I can call the name, the government of Jamaica raised US $400 million, or approximately Jamaican $65 billion, on the international market. And it did this by creating a special purpose vehicle called MOAIR, Montego Bay Airport Revenue Finance Limited. The deal was significantly oversubscribed. But the key point to note that is applicable for capital markets deepening is the risk mitigation. The notes are the sole obligation of the special purpose vehicle, MOAIR, with no direct recourse to the government of Jamaica. The structure includes a cash-funded reserve fund to withstand potential stress. I am highlighting that transaction, even though it was done on the international market, because within 3 months of doing that transaction, of raising US $400 million, what happened? Melissa hit airport, airport securitization, Melissa, Category 5 hurricane. You have securities that's dependent on revenue flows from the Montego Bay Airport. And we know what happened in the aftermath of the storm. But did the investors flinch? Did they run away? Did they try to sell their bonds? No. We kept them abreast of what was going on in regards to passenger traffic. And I can tell you pretty soon they recognized that the impact on the airport was temporary. One of the important features was how the investment was structured. It was a special purpose vehicle that insulated from the general risks in the market. And then our international rating agency, Standard & Poor's Global Ratings, affirmed the rating after Hurricane Melissa, noting the project's resilience despite the expected short-term traffic declines. That, ladies and gentlemen, is the power of structuring of a transaction, and I'm sure Angus will agree with me. Further back in time, I also led the team, along with our advisor, NCB at the time, for a successful IPO of the then Wigton Wind Farm. At the time, it was a historic event in Jamaica. April to May period of 2019. The government sold 100% of its shares and raised 5.5 billion Jamaican dollars. About 31,000 Jamaicans subscribed. And it got listed on the main market in May 2019. I have to say, I don't think I've ever said it, but at the time, there were many in government that did not want to see that company IPO'd. There's a thing about government that you should not sell assets. But this finance minister is here to look across government to see how we can more efficiently utilize the assets of government. And if it is that the private sector can manage it better, manage it more efficiently, and create value for the people of Jamaica, we will take steps to do that. So that company gave Jamaicans then an opportunity to invest in the energy sector. And I'm happy to note that just recently, the company reported a net profit of $231 million in the June 2025 quarter, and that was a 24% increase year on year, supported by improved wind conditions and higher output. Since then, the company has changed its name to Wigton Energy Limited, and it is going on to greater things. So, ladies and gentlemen, there is a lot of room for government to deepen capital market development here in Jamaica and in the region. On the horizon, one of my favorites is the micro market. And I'm looking at Marlene. I'm looking at the new managing director of the Jamaica Stock Exchange, and I'm going to put it out there that I'm expecting the micro market to be up and running by the second quarter of 2026. Yes? Ladies and gentlemen, did you hear that? Second quarter of 2026. So the government aims to improve the pathway to equity financing for micro enterprises by working closely with the Jamaica Stock Exchange to create the architecture of a micro market, a distinct two-tier segment within the junior market framework, with the current junior market operating as Tier 1. This tiered structure allows the Jamaica Stock Exchange to extend equity market access to micro entities by leveraging the existing junior market infrastructure rather than creating a parallel or standalone market. By adopting a two-tiered junior market structure, the JSE can facilitate earlier stage capital formation while preserving the fundamental principles of transparency, investor protection, and market confidence that underpin the success of Jamaica's capital markets. So in June last year, led by the JSE, a multi-stakeholder steering committee was formally established, comprising representatives from both the public and private sectors. The committee's work is grounded in the recognition that micro-entities continue to face persistent constraints in accessing affordable capital. The committee, I believe, has made substantial progress and is now at an advanced stage of finalizing the first phase of implementation, again with a view to operationalizing the micro-market in the second quarter of 2026. Thank you, MD Livingston. And as you know, the success of the junior market provides strong empirical justification for extending this model downward to support micro-enterprises. The micro-market therefore builds on a proven high-impact framework, ensuring that smaller enterprises can benefit from the same disciplined governance, transparency, and growth pathway that has delivered national benefits over the past 16 years. Of course, there has to be capacity building for micro and small enterprises. And this is intended to strengthen the pipeline of investment-ready businesses over time and support a more sustainable flow of quality listing. And I'd like to see the Jamaica Stock Exchange move quickly to draft in micro-market rules for integration into the junior market rulebook. I'd also like to see submission to the relevant committees and the Financial Services Commission, FSC, for regulatory consideration. And I look forward to the launch in the second quarter of 2026, and I'm repeating that many times, calling it into being. And if you'll just permit me to mention, just looking back in my past here in Jamaica, my husband and I, Leah Williams, together with other investors, we created the first real estate investment trust to introduce the market to invest in real estate via the stock market. As you know, the traditional way to invest in real estate is generally to own it outright. That means you have to have a lot of capital. You take on the risk fully. If it works out, you make a lot of money. If it doesn't, you could sink. So utilizing the stock market allows you to limit your risk, and we've seen other companies follow since then. But going forward, how do we build? How do we unlock capital? The pension and insurance industry in Jamaica have some $1.2 trillion in investment assets. To give you a sense of the magnitude of that, that represents almost a third of our gross domestic product. And I believe that billions of dollars of capital can be unlocked. As an example, well, it can be unlocked, but it has to be done in a way that still preserves the safety and security of those entities. I know that the current asset allocation for the insurance and pension industry could be reviewed. Changes could be made. And when we look at it in the first go around, that could allow upwards of $60 billion to be moved, could be moved into other types of investments other than where those monies are currently. Across government, yes, even though you heard the announcement about the $6.7 billion US dollars access that we have to use it judiciously. 2.4 billion of that earmarked for private sector investing along with government. My young people said to me, Minister, you have to crowd in the private sector. And I'm sure last night you heard the Prime Minister talk about that. To give you an example, just yesterday, in speaking with the Health Minister, he told me he needs $26 billion to do all that he needs to do over the next 5 years. I know he's currently speaking with our international investors, but there is room for investments to be structured so that Jamaicans can participate in what the government is going to be doing, in the rebuilding that the government is going to be doing over the next 4 to 5 years. Traditionally, it's the government that provides the fund to build buildings, hospitals, schools, health centers, offices, and furnish them. But now we have to begin to open our minds as to how we structure the physical assets, convert that into financial assets of certain facilities so that Jamaicans can buy into it. The government's role is not to own all the physical assets that exist. Its role is to manage, to provide the skilled professionals and help them to deliver the best service that they can. The CFAs in the room and others could structure the kinds of transactions to make them work for government and investor. Both sides would benefit. In the case of the health sector, government gets a hospital and the insurance or pension fund gets an investable long-term asset. So we are going to crowd in the private sector. Here's another area. For tertiary institutions that are contemplating student housing. And I understand from one of our institutions that every year, more than 2,000 students apply for housing. They can only satisfy maybe 200 of those. So here's another situation in which creating an investable structure that a pension fund can invest in will catalyze not only deepening of the capital markets, but will allow us to move with velocity in Jamaica. Similarly, we can have a big push on MSME finance, not only through the traditional channels, but through a capital market-based approach, where seasoned MSME loans are securitized under strict eligibility criteria with private loss absorption layers and explicitly capped government support. This framework draws on international precedents and is explicitly designed to scale credit while preserving fiscal transparency and market discipline. Of great interest to me is that the private sector is proposing the establishment of a dedicated reconstruction and resilience investment vehicle structured to blend public capital, private investment, and concessional finance within Jamaica's existing fiscal responsibility and PPP framework. The vehicle is conceived or can be conceived not as an off-balance sheet workaround, but as a disciplined platform for co-financing resilient infrastructure and reconstruction projects with contingent liabilities explicitly identified and capped. And so I'm very encouraged by the response of our capital markets and our private sector. So our goal is to mobilize long-term domestic savings, our pension funds, our insurance companies, and international capital into productive, resilient, growth-enhancing assets. We know that government has to create the legal, regulatory, and auxiliary systems in order to do the things, in order to ensure that we have bankable projects, that prudential risk are there, that we have the market plumbing, which is the custody, the valuation standards, disclosure, governance, licensing, supervisory capacity. We know that we can create a capital formation pathway, private funds plus public market plus securitization. And we know that we can have credible investor protection in terms of fit and proper, related party rules, transparency, beneficial ownership, enforcement. We can introduce an explicit qualifying long-term assets category. We can ensure that rather than have a blanket loosening, that we still continue with the strong, calibrated prudential treatment that we have right now. And finally, a final area that has been at the forefront of my mind, and I've taken some action, but I see that it's going to need government to establish policy, and that's in the area, and Angus will know this, and he knows that it will be of significant benefit to local Jamaicans, and that's in the area of factoring. It doesn't sound, sexy, but it allows financial intermediates to do this, and in those instances in which government owes money for work in process or work completed, right now, it takes a lot of energy for the contractor to be liaising with government, calling, trying to get money. When you have financial sector companies like NCB Capital that is willing to lend against the monies that are owed from government. But what I'm realizing by trying to get a couple of these done is that within government, we are going to need a policy. We're going to need the rules in order for our permanent secretaries and others in the system to feel comfortable utilizing this. But I know that if we can create that kind of environment, instead of a contractor waiting 30, 60, 90, 120 days to be paid, they could have the money much sooner to continue to put that into other projects. And you can see how stronger growth can happen in Jamaica. I'm committed, and I know that our financial sector will be there to ensure that money moves with velocity. Across the Caribbean, we've long envisioned stronger collaboration of capital markets. We have the Barbados Stock Exchange, the Eastern Caribbean Stock Exchange, Guyana Stock Exchange, Trinidad and Tobago Stock Exchange. And for years, I know there have been meetings and more meetings to see how we could collaborate, but it's not beyond us, Managing Director. This collaboration, the platform can be created, and it would allow greater diversification in the portfolios of entities such as insurance companies, pension funds. Ladies and gentlemen, the future for Jamaica is bright. Fiscal prudence will continue to be our anchor. We are rebuilding. We're building in resilience in our infrastructure. As you are aware, we have navigated through COVID. We've navigated through Beryl and Raphael, and we will navigate through Melissa. We have never had as much funding and international support as we have today. And I see the country representatives from the IDB here. Nastasha, welcome. We have a massive opportunity to take decisive steps. And I can assure you that as government, we will keep the economy stable. Melissa was a climate crisis. Many persons are still not back to where they were pre-Melissa. Rest assured that your government continues to make those decisions to keep the economy moving. The biggest example of that was ensuring that the country had electricity in quick order. And from electricity flowed water, because many of our sites in the water infrastructure depend on electricity. You saw our roads were cleared in no time, and now the Minister of Works is going back to ensure that we build resilience into our roads. Of great significance, ladies and gentlemen, the international rating agencies looked on and they gave us a lot of credit for the discipline that we exercised over the last many years. Like us, they too looked at the experience during COVID, and they saw that our debt to GDP did increase. But they also saw that we took steps to ensure that we brought it back in line. And they are doing the same thing here with Melissa. Yes, our debt to GDP did increase because our GDP declined primarily. But they're giving us the benefit of the doubt that we will take those steps, and in the medium term, next 3-4 years, we will be back on track in terms of that debt trajectory and all the other fiscal numbers. We're going to hold on to the gains, not just for persons gathered here today, but for those who do not have the opportunity to be in these chairs this morning. We have to hold on to those gains for them as we help them to rebuild their lives. And so the capital markets and the activities to come to deepen capital markets, it's not just for persons who have money. It's for those who don't, because we want to get them to a place where they have that confidence in their own affairs. We will continue to build on the stock exchange. We will roll out our ideas. You will see them, and they will have an impact on growth. All of this financing that you've heard about, we have to turn it into higher GDP growth. It will not be satisfactory for us to emerge from this and still experience 1 to 2% growth. We need to be in the 4, 5, 6% range in GDP growth. But it's going to take all of us kind of recognizing what we have to do in our own sphere. Government will be the coordinator in areas where it should be the coordinator. The private sector will be in other areas. And I'm sure our friends in the financial sector, they're waiting. They're waiting to see how they can be incorporated in the process to create those instruments that they can take to you, take to the pension funds, take to the insurance companies, take across the Caribbean to help all of you invest and gain from all of this. So let me end here by saying God bless all of you. We've come through Melissa together, and we will continue walking together to build a Jamaica land we love. Thank you very much, ladies and gentlemen.
Thank you very much, Minister, for an engaging presentation. So the Minister has some other obligations, so her time with us here this morning would be very limited. Minister, before we open up the panel to questions from the crowd, I stand before you here today on the 21st of January 2026 to make two promises on behalf of NZB Capital Markets. We commit to the government of Jamaica that we will make ourselves available pro bono, our legal and policy framework surrounding the factoring of receivables product, make that available to the government as you build out the framework to facilitate this type of financing. So that's one promise. The second promise we will make is that we'll make factoring sexy, right? So time is limited, but we would love to open the floor to questions from the attendees here today for the Honorable Minister.
Hi, Minister. I took the hint, but I'm going to try and put you on the spot. Would you see infrastructure as an area for a separate carve-out beyond the private debt and equity bucket of the pension regulations? And perhaps you can expand a bit on your thoughts for areas such as the micro exchange, as it seems to be further ahead than many of us thought, so I'm happy to hear that. And finally, the issue of how to get legislation and regulations done, in particular the issue of GP and LP, which you're very familiar with, I know. That would be useful so we don't all have to go to St. Lucia, which I think Jamaican capital should be in Jamaica and not offshore.
Minister, just before you answer, please permit me to ask the gentleman to identify himself and his organization, just for the record. Thank you very much.
Keith Collister, Jamaica Observer Today.
Thank you for those questions, Keith. I take it from the first one, can pension funds invest in infrastructure? That was your first question, right? Separate bucket. So are you meaning, can they build a building, own the building, rent the building to government?
What I'm saying is that in other jurisdictions, infrastructure funds are a thing. We kind of got round it a bit, but in my view, in the same way you have private debt, you have private equity, you should have infrastructure as a separate asset class.
Okay.
Particularly post-Melissa.
Yep. And I want to give you my commitment to begin that process, to look at infrastructure as a separate asset class. Yes. And with regards to the micro market, I am depending on the Jamaica Stock Exchange. I've taken their timeline and I've put it in the public domain, and we're going to work. We're going to work with the stock exchange to make sure it happens. And the legislation for general partnership, limited partnership, yes, it's meandered a bit, and I see Minister Steve Wright, yeah, shaking his head vigorously, committing to getting on it and helping to move it along.
Any other questions? Yes. Sure.
Hi, good morning, Minister.
Hi, good morning.
Kalila Enriquez Reynolds, Money Media. I'm also interested in hearing more about the progress towards the micro exchange. You said the second quarter of this year. Is that calendar year or fiscal year?
Calendar year.
Oh, so we're on track. You originally said April, so we're on track for April to June.
For the second quarter of the calendar year.
Excellent.
Yes.
And what I really want to know, though, is what progress has been made towards determining the criteria for the micro exchange. For example, one of the concerns was that the regulations that exist for the junior market would be too stringent for the micro market. So what concessions have been arrived at for that so far?
Mr. Morris, you want to help me out there?
Thanks, Mr. Kalila. Thanks for that. We will be engaging stakeholders within the next couple of weeks with a concept note which has been prepared. We are well underway with drafting of the regulations, and we will be engaging the FSC within the month on, certainly before the end of February, on the rules that are being proposed. And as the Minister has indicated, we have accelerated the process by conceptualizing it as a second tier within the current framework of the junior market, which obviously accelerates the process significantly.
Minister, one more?
There was
Neville.
one here and the last one there.
Oh, okay.
Good morning, Minister Williams. Congratulations to the government of Jamaica for the work that you have done with the economy.
Thank you so
I'm
much.
Colette Smith from Dr. College J.A. Smith and Associates, persons who would have been at the conference. 15 years ago, you would have known me as a PhD student. One of the areas I looked at was governance and public debt management. Interviewed a number of prime ministers, including the most honorable Prime Minister, Andrew Holness. The vision he outlined to me at the time when I interviewed him, he has done very, very well. And I tick almost all of the boxes, the 8 fundamentals of good governance. There is one area that I've questioned Dr. Clark about, and I'm questioning you again today, the issue of corruption. We understand politics and the need to have politicians who can win their seats, but I do not think that the Prime Minister has been decisive enough in addressing the issue of governance. The crime issue, excellent work. The World Bank says that if we can reduce crime and corruption by 4%, we can quadruple GDP. What will you do as an administration about the issue of corruption? Thank you.
So we understand the cost of corruption on a lot of different fronts. And if you look back at the history of this administration, you will see the number of institutions that have been put in place to focus on different areas in terms of our governance, our overall governance. We continue to strengthen those institutions by providing the budget support for them, by ensuring legislation that needs to come in front of Parliament happens, and we will continue on that path as areas are identified that need strengthening, we are committed to doing that. Thank you.
Thank you, Minister. Last question.
Thank you so much. Good morning, Madam Minister. I am Kamala Rampersad de Silva. I'm the Chief Executive Officer for the Caribbean Corporate Governance Institute. Let me start by commending you and your government. I think it's been really so brilliant to look on in the region and see the strides that Jamaica has made. We continue to have tremendous admiration for the work that has been done here with your governance. So specifically, I wanted to address the issue of how you've been able to get some of the state enterprises listed on the stock exchange. We are trying to advocate and spread some of the good practices that has been adopted in Jamaica here, particularly when we listened to Prime Minister last night extol the benefit of how these governance practices has helped the country. So my question to you would be, what would be some of the first steps you would encourage the governments of Barbados, Trinidad and Tobago, Guyana, and so if they are to follow a similar approach to have their state enterprises listed on the stock exchange in order that you can raise capital within your country to strengthen the economy?
I would say the first thing you have to be is decisive. Once you mention it, you're going to get opposition. Because remember, the persons working in this state enterprise, they're comfortable. They don't know what the unknown is when they become a private sector entity, when they're listed. So the government has to be decisive, and you have to lead and say, this is what we are going to do. Set your time frame. There'll be a lot of work to be done, but do not be dissuaded by all the arguments you're going to get as to why this shouldn't be done. Right? So that's, in terms of encouragement, I would say just be decisive.
Minister, on behalf of the Jamaica Stock Exchange, the sponsors of this year's conference, and everyone here, we'd like to thank you for the time you've spent with us this morning and for the commitment of the government of Jamaica to take things forward in a trailblazing fashion. Thank you, Minister.
Thank you so much.
Okay, so thank you again, Minister Favour Williams, and thank you, Angus Young. Clear priorities, strong direction, and a reminder that confidence begins with clarity. So now we're moving into segment number 2, and I was asked to give those of you, anyone here trying to find the password for to get on the internet? I have that information, and I'm going to ask someone if they could just bring that card that's sitting on that table for me with some information on it, so I can give that, or you can get on the internet. Okay. Now, session 2, innovative financial products driving emerging market growth. Innovation is the bridge between capital and opportunity. Our moderator for this session is a manager. Thank you. Is the manager Group Business Development, JSE, is Andre Gooden, and he'll be along in just a moment to set things up for us and get us rolling. But here's the information that for those of you seeking to get on the internet would like to know. The Wi-Fi, it's JSE Conference 26. That's JSE Conference 26. And the password is JSE_2026. Repeating that very quickly, JSE Conference 2026, password JSE_2026. And now it's over to Andre Gooden.
Thank you, Michael. Good morning, everyone. This next session focuses on innovative products driving emerging market growth. The minister mentioned in her presentation some innovative financial products that are in the pipeline, and our next presenter, John Stoltzfus, Managing Director, Oppenheimer, and Chief Market Strategist, has lots of experience at this. He has over 30 years of experience in financial markets, emphasizing multiple asset classes and combined with global market strategies. His profile is in the program, which you can examine further, but I would just ask you to welcome John to the podium.
All righty. Great to be here, and I want to thank the government high-level officials, your Prime Minister, your Minister of Finance, for terrific talks, and also to the other luminaries in the financial industry who have spoken, and the members of the JSE who have addressed this audience. It's always great to be here in Jamaica. I want you to know I've been in this industry for 43 years. I don't know that in excess of 30 years, perhaps they're trying to make me look younger, but I'm closer to 100 than I am to 40. You do the math. But what it does offer our clients, both institutional as well as private investors, we believe, is context. I've been through every boom, bust, and recovery cycle since 1983. That's a lot of stuff. My first major crisis to work through, I was managing pension and profit-sharing money for small corporations in Manhattan, as well as for high net worth investors and small business owners also of very small corporations. And I'll never forget the crash of 1987. And it was an important moment for me. Among the private investors who I was representing, was investing their money for them, was my aunt, who had turned 80 in August of that year. And I'll never forget some of the people who called me up, and the clients. Most of them, of course, because they were all much older. At that time, I was just a kid, practically. And they called to see how I was doing. They weren't particularly worried because we were well diversified across asset classes, and we owned quality. And also, they had lived through World War II. Some of them had even lived through the Depression and knew that bad times are part of the cycles of life, and they're reflected in the markets as well. But when my aunt called me, and my aunt had been the person who in my private life, taught me a lot about the markets long before I ever got into the financial markets. When she called, remember, she had retired, I think at around the age of 62, and now she was 80. She had a portfolio that was primarily stocks, because she believed in stocks more than she believed in bonds, okay? And when she called me, she wasn't saying, Johnny, what are we going to do? This is a disaster. The S&P 500 and the Dow Jones Industrial Average are down 22%. I'll never forget it. Her words were, Johnny, what should we be buying today? So that gives you an idea where I come from. I must say I've been recognized as a bull in the market by the press since 2009. And January 24th, as I recall, that was the date. I've worked for, by the way, most of the other well-recognizable names on Wall Street on a global basis. I'm not going to mention them because many of them are competitors, and we like competition, but why mention your competitors? But I was working with one of these major banks, and they sent me out on January 24th of 2009 to Des Moines, Iowa, to speak to about 200 high net worth investors and their advisors. On the stage with me were local economists from local universities, local government areas. Everybody was long-faced and very worried. And the market had declined at one point about 48% in 2008 after Lehman Brothers had gone down. And then I think by the end of the year, there'd been a rally of some sort. So I think the market was still down about 38. And it was in the process of that first quarter losing 27%. in that first quarter before it would reach a bottom on March 9th of that year, before it began to rally. So stocks were falling like pouring rain. And Barack Obama was being inaugurated in Washington on that day. And Republicans were worried, oh my gosh, he's a Democrat and he's a younger senator and he didn't attend some meetings. What's going to happen to the markets? And here I come up to the podium and I'm the round-faced, smiling boy, and I think that things look pretty good. We've got a change of administration, and that's not a political comment, but I have to be politically agnostic so I offend Democrats and Republicans, okay? Because the market is comprised of Democrats, Republicans, socialists, communists, harsh right-wingers, harsh left-wingers. It's all kinds of people because they know they can make money in the market, okay? From a historical perspective, past performance, no guarantee of future results. And anyway, so, I thought that a change of administration was a good thing. A brilliant man. And then I also thought that Ben Bernanke and Hank Paulson, who had been the treasurer of the outgoing Bush administration, had put in a great system of liquidity that I believed would recover the U.S. markets by the fall of that year. I was a little bit conservative because things started, the economy recovered by June of that year. And when I said this, they thought, oh my gosh, this guy's got to be crazy. So luckily there was a reporter there, and they were videotaping it, by the way, too. And the reporter said to me, well, if you're so positive about the economy recovering, when do you think stocks will come back? Remember, they're coming down like pouring rain at that time. It would eventually drop as low as, the S&P would drop as low as 666. Of course, had the press go all over, the devil was in the markets or whatever. They closed that day, by the way, around 676. And since have risen just about 10 times over that, over the last, since 2009. Anyway, so I thought in my head, I said, my gosh, the press can be so rude, to put you on the spot, 200 people. But I thought about it for about 14 seconds, and I said, if equities are a discount mechanism and they're looking forward to price the future, I said, I think stocks could rally as early as the end of the first quarter of this year, which would have been by March 31st. Markets hit a nasty bottom on March 9th and proceeded to go higher after that over the years, notwithstanding some pullbacks of 15%, 20, 18.9, 19%, different drawbacks over the course of the last 17 years. But remarkably, what it's all about is people need things, and stock exchanges reflect that need and companies meeting those needs, and it flows into revenue growth and profitability. Ultimately, the only thing, in my viewpoint, that the equity markets care about is growth of revenues and growth of profits. Now, it's not cynical, it's just as The Godfather said long ago in that movie, The Godfather, it's business. That's what business is all about. But the wonderful thing about that is revenue growth and profitability generate prosperity for Main Street wherever it is, or the Wall Street wherever it is around the world. And that's what makes these markets so marvelous. But I've maintained a bullish position every year since that 2009 point. And sometimes people think I'm nuts, but we've been fortunate in that our calls have been remarkably good. I was wrong in 2022. The market came down to, S&P 500 was down about 20% that year. We had a bear market. But by the fourth quarter of that year, people realized that none of the things that were predicted by the bears had actually occurred. We didn't have a recession in earnings. We didn't have market unemployment. And so the markets rallied in 23, 24, and 25. So I'm very grateful that our calls were worked out. And of course, I'm nervous now because so many of the bears have capitulated in the process of this huge rallying process that they're all on my side of the boat. But, pardon? Yep. But that said, I can tell you this, that I do believe that the fundamentals remain remarkably good. In the US and in different countries around the world, including this one, the fundamentals that have to do with proper regulation and support of the capital markets is well intact. It's also the recognition that entrepreneurism is very much alive. And we have extraordinary innovation in terms of technology that I think is an important thing to consider. So as a strategist, for you to know, things that I look at right away and trends, I'll give you some very quick, short answers. I'm being told because I don't have much time. I have to really roll away here. The wonderful thing, by the way, is the world's markets on a broad basis are accessible today for many people like never before through innovative products. And the innovation includes ETFs, or exchange-traded funds and exchange-traded products, that enable the private investor to be able, we think, with a professional advisor helping them to determine their needs, objectives, their tolerance to risk, but to build portfolios that mimic the portfolios that professional managers can build. And on a global basis, and within that global basis, a regional basis representing both emerging markets as well as developed international markets, and of course the US market. Lately, one of the things people talk about is deglobalization. We don't think that's the case. We think it's a reglobalization, and it came after COVID when it was recognized. I think everybody sort of awakened to the fact that in terms of production of many things, all roads led to one country, to China. And so when this was, everything got thrown out of whack by COVID, the world was really turned into an additional tailspin when many businesses and communities were shuttered around the world. And so the reglobalization is very simply likely to be exceptionally beneficial for the emerging markets, especially those that are neighbors of the US in the southern hemisphere. It would seem to us that countries like Jamaica, and especially well positioned as you are in terms of philosophically and with an encouragement of capitalism and entrepreneurism, we think this is just a terrific opportunity. And we think it's one that will see great changes around this area of the world in particular. Europe has its problems. Europe, I always think, and I love Europe, by the way. When I say I love Europe, I'm not, by the way, nothing that I say is a direct recommendation to anyone here, whether they are an institution or an individual, to follow what I'm recommending or suggesting. That you need to know yourself as well as with the financial advisors that you work with, whether you're an institution or an individual. Because I don't know you, and investing is a very personal experience. But at any rate, we do think that what we have here is a remarkable opportunity, notwithstanding challenges. We have extraordinary ideological challenges towards capitalism today around the world. And we have areas of unfair competition. We have areas of questionable practices at remedying that unfair competition. But the prospects are good. When I got into this business, information was not very much, everything you read was in your newspapers or television, and the news tended to be 2 days old. There weren't financial channels. You didn't have CNBC. You didn't have Bloomberg TV and radio. You didn't have Reuters the way it is today, accessible, very accessible, and many other outlets within the media, so that you know almost instantly what somebody is saying. You're not reading it 2 or 3 days later after some activist is trying to take over a company or a change is made in terms of government policy. It's right after it comes off the microphone, everybody knows it, or at least those that are listening to the media channels. But one thing that has occurred recently, people talk about valuation. And I've known clients for 43 years, both institutional clients as well as private clients. And the profile has definitely changed. First of all, it's much broadened, okay? You don't have to be a billionaire to have a diversified portfolio anymore. You don't have to be a multimillionaire. You don't have to be a millionaire, whatever. And the other thing is people are investing for more serious needs. Outside of the institutions that were investing for pension plans and a variety of needs related to the capital markets, the old market, when it came to the private investor, usually the private investor arrived late on the scene. The market had already gone up 20%. The taxi driver, when you'd get into the back of the cab and you had a copy of the Wall Street Journal or the Economist with you, would say, I got it, do you have a stock tip for me? Or they would say, which is even more worrisome, I have a stock tip for you, okay? But nowadays, people are investing for things where they're recognizing that there are some areas that governments will no longer be able to provide to the same extent in order to remain solvent, okay? For instance, in the US, our Social Security program, very small increases in the last few years for retirees. It's very clear that Social Security will not be eliminated by US politicians. Both sides of the aisle know they'd never get elected again if they eliminated Social Security. But it is recognized that it will no longer be, and has no longer for quite a few years, been a substantial portion of the income provided in retirement for individuals. So people are planning ahead, and retirees in retirement, older people like myself, are acting more like my aunt and still owning in their diversified portfolios a combination of equities and fixed income. And looking for diversification within regions of the world, countries of the world, market capitalizations, large, small, mid-capitalization companies, in terms of style, growth versus value, and sector investing, considering the difference between cyclical companies, those whose profitability is most tied to the economy, rather than those that are defensive companies that are simply those, well, like in the old days we used to say of consumer staples, Coke, smokes, and soaps. The stuff most people don't give up even in a depression, you know. So it's not necessarily a brave new world, but it's an extension of a world via technology. Related to AI, I'd like to say this. In our viewpoint, and from the meetings that we have with institutions and conferences, including those recently at Bloomberg, we see AI as a tool. We don't see it replacing humanity. Inevitably, it will change the workplace, just as the self-operated elevator changed jobs for elevator operators. If you go back in history, back to the 1890s, the early, probably into the 1920s, I don't remember when, I wasn't born yet then, I don't know when the automatic elevator came in where the passenger put the floor in. The situation is one where jobs changed and people went to different jobs. They got trained for different jobs. They found interesting things that they could make money with. And we've seen that with the internet. So with that, I've shown I've got 5 minutes. I'm going to have to open it up to questions. I hope this has been useful for you. We are on the LinkedIn. You can find me, John Stolfus. And if you'd like to link in with us, please just mention that you saw me at this conference so that I know who you are.
Thank you, John. A very comprehensive impression of the alternatives out there. Couple of questions from me. The minister spoke a while ago about the triggering of the cat bonds. Could you explain to our audience what are cat bonds, how it actually works?
What are?
Cat bonds.
Oh, yeah. Well, when you get to cat bonds are against cataclysmic events, okay? And they are a way in which an institution can invest in for the institution that's many institutional investors they're hoping to buy a bond where they'll make a profit off of the bond because things will be good. Those who are insuring against damage in a cataclysmic situation, they are looking to get paid an amount without delay in terms of the bond's returns in the event of a cataclysmic event.
Right, thank you very much. The other one, green finance. Green finance, big issue, big new world of, universe of investment opportunities there. What is the profile really of the investor in green finance products? Mostly institutional, what is the risk level, etc. at this time?
Well, when talking about green finance, are you referring to green fields or are you
Green
referring
bonds.
to...
Bonds.
Okay, in bonds and to finance new age energy?
Yes, correct.
Yeah, we think they would be relatively good. Again, once again, it would be the quality of the issuer, the experience of the issuer, whether that issuer is investing in greening, or whether it is actually a greening company that is involved in this. Once again, you need to look for the quality of it and the ability of that firm to deal and navigate with challenging waters. In terms of, by the way, in terms of looking at alternative energy, we think that fossil fuel will likely be much greater a component of the world of energy for longer, only because it will take some time for alternative energy to be able to deliver what it needs to deliver to replace fossil fuel. You know, I don't expect in my lifetime that fossil fuel will be eliminated as a means, but every year gradually, alternative energy becomes a greater part in terms of how we will be able to power our prosperity.
All right, thank you very much. Any questions from the audience for John on the topic of innovative financial products for emerging market growth?
Any answers?
There being none at this time, we have one. Hi, Camille. There's a mic behind you.
Just in response to what you just said about it being some time before fossil fuel is replaced. So in the meantime, as the fossil fuels global warming and countries such as Jamaica continue to face these exponential threats, I mean, we've had a hurricane, huge hurricane, 2 years in a row. Does the capital market feel any responsibility to try to assist countries such as Jamaica, which are at the forefront of global warming and having to deal with it?
I most certainly feel that many of the companies in the fossil fuel industry are looking to diversify into greener energy processes. I think that AI will enable scientists to develop cleaner methodologies related to fossil fuel. And the effects of what we've seen in terms of climate change over the last 30, 40 years, which has been increasingly pronounced, has affected all countries. You know, it affects the southern United States, it affects Europe, it affects Africa, South America, as well as Jamaica. You know, and even in New York, we had, what was that storm we had, Sandy. It was a disaster. People lost their lives. There was destruction that was extraordinary that occurred there. And I think the process of it is, it just takes some time. And the biggest challenge to alternative energy is how do you store the energy that you don't need that you receive from the alternatives? And when I think of that, I think of the turbines that generate, that capture the wind and turn it into energy. The problem is, a lot of times they'll have too much energy, and where do they put it? How do they store it? But again, I think that with AI, I think we're liable to enable researchers to find quicker methodologies to building better batteries. The other problem, by the way, in the process of this transition is you need industrial forces of manufacturing and mining related to what's involved in creating these turbines or batteries that creates pollution on its own. It's not an easy answer. This is one of those times, I think, that humanity realizes that what we do genuinely has an effect on future generations. We have to learn how to manage it.
Thank you very much. Thank you, Camille, for that question.
Thank you. Sorry, apologies for not identifying myself. Camille Facey-Facilo. Thank you for the response.
Thank you.
One more question. There's one to your left, Richard.
Over here.
Yes, sir.
All right, good morning.
Morning.
Yes. So my name is Tajon Stewart, and I'm representing myself.
Good. Welcome.
But I gotta be honest, I'm an individual. Right. Now to Mr. Stolfus, right?
Stolfus.
Stolfus.
Right.
Okay, right.
Call me John.
John. Tajon. Okay, great. So building off a comment of yours earlier, especially in regards now to the prior question on fossil fuels, I have to ask, when we're looking at newer products, newer forms of energy, right? And you had an optimistic take in your speech. What are some signs that we could really or reasonably look for to justify our optimism in said investments?
In investments in
alternative forms of fueling, for instance.
Yeah, you know, I would say this. The market has shown that it can be, it's very fashion-oriented in terms of investments in energy. Because I manage money for the firm, Oppenheimer doesn't allow me to talk specific names in terms of securities. But I do know, like the alternative energy ETF, one of them that was involved in solar energy, was pretty unpopular over the course of the last year, and now is regaining some of its popularity. That just happens. It's just like the ETF for water, and water is one of the most precious elements that we have to need, right? It was one of the earliest ETFs. Back to, it must have been 1998, 1999 when the first water. Then, you know, you would have been better off, I think, investing in the S&P 500 in an index instead of that. The market is, you know, you've got different players. You've got intermediate and long-term investors. You've also got the short-term, the highly leveraged crowd, the speculators, and you just have traders who trade the market as it develops day to day. And within that, I think one needs to identify themselves. So if you're an intermediate and long-term investor, find the best quality representations, whether it's an ETF or whether it's a basket of stocks in that area, but be patient and manage it to the extent that you feel comfortable. So you might want to take some profits if it performs exceptionally well. Sometimes the hedge funds will jump in. They did that. I'm sure, I can't say, I know it for certain, but having owned water, for example, water ETFs at one point, they'll jump in and they'll push it up, and then they'll take profits because they have impatient investors. They're serving their clients. So it's all part and parcel. It's an art as well as a science. Investment is like music. It's like math and emotion. If you look at a piece of sheet music is a formula.
Yes.
It's an equation. What brings it to life is the interpretation, and that's what we have to live with in the markets as strategists, as investors, and economists.
Right. So there's actually the answer really, in summary, is high demand for that type of security, and high demand by the investors as well for issuers in those types of securities.
And so
both sides. Yes.
You need to evaluate the individual security.
Indeed.
And ideally with an advisor who's experienced in that particular area.
Yeah. All right. Final
Thank
question
you. Great
now.
question,
Thank you very much.
by the way.
Go ahead. Identify yourself quickly, please.
Hi, good morning. Stuart South from Sagicor Investments.
Yes, sir.
I think we all can agree that products and services should be matched to demographics, right? Certainly in the Caribbean, we've seen, and in the world, we've seen a shift to aging populations. In Jamaica, our local context says that we're below the replacement ratio. How do you see the investment landscape changing to meet that new demographic that we're going to see in the future? And you can speak in terms of type of products or even asset allocations.
I think that's a terrific question. I'd say one thing you've got to consider with demographics is usually the younger generation will be attracted to and understand that which their generation is changing. And sometimes they'll miss what exists today. That's why the old timers, it's good for context. We provide both young and old are very important, and the middle is important too in considering investments. But I would say the major change that we've seen is that in many of the larger economies in the world, as I think your question alludes to, is the populations are shrinking. And we can't help that, but in some emerging markets, it is as well as several changes. If you're an agrarian economy, you need a lot of kids to help out on the farm. And I'm the great-grandson of a Mennonite farmer, okay, so I understand that stuff. But then once you have other jobs, you move to the suburbs or the city, life becomes more expensive. You don't need as many family members to work on the farm. The population grows smaller. Also, affordability has been problematic, and it is a great thematic that has been embraced by what we say both sides of the aisle in the U.S. right now, and it's being addressed. And I think part of that, and it was, it's we need to be sure that we offer better jobs, better opportunity, and we think that AI just may be it. We could have a renaissance intellectually, industrially, scientifically, like we've never had before, as the ability of AI to serve as a tool, not to replace humanity, but to serve as a tool for humanity to go through all the data. And one of these conferences that I attended, they had a breakout session, and it was people in our industry, okay, but it had a lot of people from other industries. And I was fortunate enough to sit at a table with a scientist from a pharmaceutical company. And she said how she loved AI because it helped her go through voluminous, challenging research where she had to go through so much data. It accelerated the time that she could evaluate data to come to conclusions that could develop better drugs. Then she also said, and sometimes I think it's better than me. And I said, shh, don't say that. I also think with technology, you've always got a question. It has no empathy, it has no sympathy, it has no human capability of love. That's a big challenge, and that's why we have to manage technology, and it's why you need productive regulation. You know, you don't need regulation that captures technology and doesn't make it profitable or doesn't help it grow. But there's a balance here, and I think the world, through a very harsh method of living through what we've learned in terms of climate, for example, and also affordability, I think it's time we all put on our thinking hats, and you know, it's not kumbaya, but it's like we better deal with each other.
Thank you, John.
In a productive manner.
John will be here all day, today and tomorrow. So, Stuart, you can take him up on some more of those questions. Anybody else who has any further questions for John?
If I could, one last thing. Last year when I was here, my target for the S&P 500 was 7,100 by the end of 2025. It came in a little bit short of that, but we were 96.4% we captured of that return. So almost 7,100. We're still waiting for it. What's our target for this year? 8,100. From my lips to God's ears.
Good luck with that. Ladies and gentlemen, John Stolpus, Managing Director, Chief Investment Strategist, Oppenheimer Asset Management. Thank you very much.
Thank you so much, John Stolpus. And now we know why they call him the bull in the marketplace. Thank you, John. Okay, so and thank you, Andre. Really interesting, insightful, and practical session, and I would say forward-looking. Okay, so session 3 is where we are now, and that's the Central Bank's Forum. Policy execution, delivering monetary policy and financial stability in a changing world. Now, if innovation sets the pace, stability sets the foundation. This session examines how central banks protect confidence in uncertain times. And of course, inquiring minds like yourselves want to know. So here we go. Please welcome the moderator for this session, Dr. Indiana Minto Coy.
Thank you very much, and good morning. I'm going to ask my panelists to join me here. Mr. Kareem Michael and Dr. Wayne Robinson. If we could be helped with some mics as well for the panelists.
Microphones coming up.
I'll begin with the introductions, so as not. Thank you. Thank you, Neville. Good morning again, everyone. So it is my pleasure to moderate this session's, this morning's panel discussion. Central banks today, their role has evolved significantly from mainly focusing on setting interest rates. Today, central banks operate in a context of rapid changes, excessive interconnectedness, and a lot of complexities. So today we have two gentlemen who are here to guide us through in terms of understanding how central banks are evolving and their activities within this increasingly complex space. We have with us this morning Mr. Kareem Michael, who is the governor of the Central Bank of Belize, a role that he's occupied since 2021. Mr. Michael has served in various roles at the bank, and he also has a Master in Public Administration from Columbia University. We have also our very own Dr. Wayne Robinson, who is Senior Deputy Governor of the Bank of Jamaica. Dr. Robinson has played a number of roles as well within the BOJ, and he's also attended the esteemed Manchester University, where he got a PhD in economics. So we have these two gentlemen with us. Their extensive bios are in the program, so I encourage you to read the details. But before we get going even further into our panel, we have a diverse audience here. I'm going to start with Mr. Michael Kareem, who I'm going to ask to give us an overview of the current macroeconomic situation in Belize.
Thank you, Doctor. Good morning, Jamaica. A little bit better, man. I'm far away from home. Took 2 days to get here. Good morning, Jamaica. All right, I've aged a bit since that profile pic, so that's really as a result of being appointed in the throes of a pandemic. Some of the comments or the remarks last night really took me back to when I joined the central bank right after Hurricane Iris in 2001. And that was a small but powerful Cat 4 hurricane that struck Belize. I joined as a research assistant in the research department, and what that hurricane did, it helped to spur a series of international bond offerings. I think we went to the market 3 times at interest rates that topped out at 15%. So when the Honorable Prime Minister spoke last night about debt trap, we entered a severe debt trap. And of course, it was by choice. And we selectively, and I have to be careful how I say this, we had to go back to the market to restructure these bonds 3 times. We were a serial defaulter, and we had to properly address that, or we addressed that not until 2001 with the blue bond, which some of you may be aware of, where we did one of a very innovative debt for nature swap that shaved almost 15% off of our debt to GDP ratio. So that's the sort of context that I want to base my remarks. Prior to this blue bond, we were struggling to achieve primary surpluses. Primary deficits were more commonplace. Growth was mute, in fact, contractionary in a few years prior. And in the peak of COVID, our debt to GDP ratio topped 133%. Strong fiscal consolidation thereafter, including the blue bond, as well as deliberate efforts to strengthen our institutions, which is a common theme we've heard this morning and also last night. Our debt to GDP ratio is now in the low 60s, at around 63%. So, thank you. So, with that as sort of a long sort of context, where we are today, we followed every single other Caribbean economy and most economies around the world in this sort of V-shaped recovery post-COVID. In 2004, we had decent 4% growth. For the first 9 months of this year, it's really around 1.4%. It has moderated quite a bit. And it's really a tale of 2 halves. There was a contraction in the first half. The 3 months in the third quarter saw a little bit of revival. And then so far, the economic data coming out, the high frequency statistics, show strong growth in the fourth quarter. Now, this was uneven across our sectors. We like to think that we have floated the idea that Belize can be the breadbasket of our Central American neighbors, but also to the Caribbean, because we can grow, we can farm chicken, we have quite a robust cattle industry. Most of our cattle goes to Guatemala and our neighbors in Mexico. So in the first 9 months of the year, we saw a strong performance from the primary sector, while when we look at services, particularly tourism, there was a softening. And I think we know why. We look at our major source market, which is the United States, and what has been going on, particularly with the middle class in America. Then you understand why there is a bit of softening there. Inflation is below 2%. I think we're somewhere around 1.4% for the first 11 months of the year. This is below 3.4%. Our exchange, on the exchange side, our foreign reserves adequacy is still above international benchmarks. It's adequate, not sufficient, at around 4.4 months of import coverage. One of the things which I am most proud of, however, is how resilient and strong our financial system is. Prior to 2020 and 2021, asset quality had started to deteriorate. And of course, in COVID, non-performing loans spiked. And so there was a lot of effort to rebuild capital buffers and to ensure that the financial system has sufficient liquidity. So in summary, I like to think that we're resilient, and we're prepared for the challenges that lie ahead.
Thank you so much. A very detailed picture there of an economy that's doing a lot in terms of resilience. With that context set then, I'll throw it out to both of you. So the theme that we're focusing on for panel is policy execution, delivering monetary policies and financial stability in a changing world. And so I'll pose it to both of you. Give us a sense of what some of these challenges are that are being faced by central banks.
Your turn, Wayne.
Thanks, Gary. Thanks, Indiana. Good morning, everyone. Let me first thank the Stock Exchange for this opportunity to participate in this very rich conference and very enlightening discussion. You know, we use the term changing world, Indiana, and, you know, reflecting on it, I think probably changing is an understatement. Because what we're really witnessing is seismic shifts. Shifts in trading patterns. We expect that we're going to be seeing shifts as well in capital flows in the international financial market architecture. Someone mentioned earlier the shifts in demography. Even in developed countries, the WHO indicates that, you know, aging population is actually growing more rapidly in developing countries. There are going to be shifts in migration patterns. And then we're in the midst of an AI revolution. We're seeing rapid expansion, both in breadth and depth, in the payment systems and in digital financial services. Then, on top of all of that, particularly for small countries like Jamaica and Belize and the Caribbean, we are experiencing recurring and multiple overlapping shocks from varied sources. It's not like 10 years ago and we'd have one shock this year and then we'd wait another 2-3 years. It's just a series of repeated shocks. So that's the complex environment that we operate in. And reflecting on it, I think it poses about possibly 4 challenges for central banks. First of all, and you know, as a central bank, we're always forward-looking. And this challenge is not unique to central banks, by the way. And so, in the past, one could always speak confidently about our central projections. Our statisticians and econometricians like to boast, well, I am 95% confident in my projection. Now, I don't know how many of them, including me, can boast of that now. Because really, the crystal ball is just murky. So we have to move beyond these ideas of that there's a central tendency and that we really know the future. And instead, we have to be thinking about range of possibilities, possible outcomes. And then associated with those range of possibilities, what are the possible probabilities associated with that? And so we have to move away from traditional forecasting to start thinking about scenarios and scenario planning. And then following on that, what are contingencies? The second challenge we face, and this is particularly important for Jamaica, is the types of shocks that we face, predominantly supply shocks, whether it be, you know, Hurricane Melissa, or it will be a supply chain shock. These type of shocks inevitably creates a tension in monetary policy making between whether we adopt a counter-cyclical monetary policy, that is, whether we lean against the wind, or whether we adopt a pro-cyclical monetary policy, that is, whether we try to accommodate and stimulate. And this has been a debate, you know, within the central bank and even within the public space for Jamaica over the past couple of years since COVID. And it calls upon for us to think a little bit more about where do we strike the balance, one. to the consistency of our focus on what our primary mandate is. And for the Bank of Jamaica, our primary mandate, as you know, is price stability or inflation management. And also, we have to then think about the timing. It's not just simply we jack up interest rates today or cut it tomorrow. Following on that, the third challenge then is really then how effective are our policy tools? Given the, as I said, the type of shocks. I mean, there's not much really interest rates can do when Melissa destroys half the crops in St. Elizabeth. There's not much interest rates can do about that. So we have to think carefully about the policy tools that we use, and also in a very dynamic financial environment where the financial landscape is changing, where there's rapid innovation as well, the effectiveness of our policy tools will change over time. So we also now have to then think about, well, what is the appropriate tool? What is a combination of tools? How do you calibrate the tools? One of the debates, you know, in academia, and also among central bank is, well, where is this neutral interest rate? Where is this equilibrium interest rates? Nobody really knows at this point. And then the final, which I probably think is perhaps the biggest challenge, is how do we communicate? What do we communicate? When do we communicate? You know, I'll say this. Often the expectations is that central bank knows everything or ought to know everything. Well, I'm going to say something that's may surprise you. Well, often we don't really know everything. I mean, I hear silence.
We'll keep that a secret only in this room then.
But often that's just the reality. So how do we communicate in this environment of uncertainty? That is perhaps, I think, the biggest challenge.
Thank you so much, Wayne, and I love that point about communication because that's essential, right? So Kareem, Wayne has just spoken about some of the challenges and tools on the Jamaican side. What about Belize and more general, if you wish, as well?
Sure, if I could just probably go back to what Wayne was speaking about. So our job really is to worry. I think a previous Fed governor said this in 1992, that's our core mandate.
To worry.
To worry.
And therefore, if our central bankers aren't worried, we should be worried.
There you go. If you look at the previous decade, it was quite simple, wasn't it? It was a benign environment. It was a low interest rate environment, very accommodative policy coming off of the global financial crisis. And the biggest concern there from those who inflation target was really and truly not whether you overshoot, but whether there's a real chance of undershooting inflation. On top of that, in Belize's case, our central concern was the de-risking phenomenon. I mean, very specific things because we anchor our exchange rate. You know, these things which are clearly visible, you can address. Now tell me how I could address volatility. I still can't figure that out. I stayed up watching all the news around Davos, and I'm sure some of you are watching what will come out of Davos Summit. But it's really an unpredictable environment. And with this unpredictability, what does that do for the models that we have built? How we actively apply inflation targeting or anchoring our exchange rates. These are built on years of macroeconomic theory. Should we question these theories now? And the question is an absolute yes. The applicability of these may have no place in today's world. Things have shifted, to Wayne's point, and there's a bit of permanency with that. It's a new world, and so we must design our tools accordingly. So from our perspective, I think what we need to do is hunker down a bit. Hunker down and do a thorough assessment. Are we ready? Are we fit for what's to come? I know Livy and those who are specialized in this field, are we fit for purpose? And right now, I could say resoundingly that we're not, because there is an unknown element out there, and we have to figure out what that will look like in the next 5 to 10 years.
Thank you so much. A question I want to pose to both of you. So we've heard a lot, even in the panel just now, about AI and the role of AI. And I want to pose to you both as central bankers, within this context of volatility, risks, and so on, are there opportunities, opportunities in technology or beyond, to assist you in your mandate?
Absolutely, and you've heard a couple of our speakers talk about it already. I think John was up here before, and he spoke about where some of those opportunities lie. Your models that you use to forecasting, the crystal ball that Wayne spoke of, certainly AI can help us. AI can help us in our reg tech. That's another area. AI can also help us in communication, another big issue. All of these things, there's certainly use cases for. However, it must be with a level of caution. Yes. We are, well, at least in my case, I'm a public servant, and we have to be mindful of the balance between job replacement, if that is something that will come about, versus the need for efficiency and productivity gains, or the heralded benefits of AI. One of the things that we're doing at the Central Bank is that we put together a team just to look at where AI should be deployed. And an obvious case there, which I didn't mention before, is cybersecurity, and that's what we're going after, really. And I'll pass it over to Wayne.
Okay.
Well, I concur fully with what Kareem said. I mean, not much to add, except that just one other dimension. One of the things I'm very intrigued about is how AI is and will continue to revolutionize financial services. Yes. Not just in terms of the back end, in terms of the developing and assisting with analytical models, but in assisting financial service providers to curate the sort of customer-focused, bespoke-focused financial services and products for their clients. So that's something that I think it's going to grow, and I think it's going to add a lot more dynamism to the financial sector and to financial markets. There's no doubt that the productivity gains from this, I mean, I think it's yet to be properly quantified or scoped. There are, of course, short-term concerns about how it affects the labor market, but that's just the nature of development. In economics, we call it creative destruction, really. That's how progress happens over time. So I think there are enormous potential, and it's very important for small countries like Jamaica and other Caribbean countries whose real value really comes from its human capital. Apart from a few countries in the region, we don't have a surfeit of natural, of mineral resources. So we really have to drive our human capital development. And here is it again, we have another tool that can allow us, I think, if we can properly leverage it, to actually leapfrog, to actually use it to provide the sort of services and innovation, not just to be consumers of the product, but to use it to provide the exports of financial services globally.
Yes, completely agree with you there, Wayne. Excellent insight. I want to open up to the audience if there are questions that we can entertain from the floor. While persons prepare themselves, I'll ask another question, just a follow-up. So, you know, in navigating your mandates, how do you manage that space between managing inflation and employment on one hand, while preventing financial system vulnerabilities on the other?
Yeah. So in Belize's case, it's simpler. We're a fixed exchange rate, and so we essentially outsource monetary policy, inflation targeting to the anchor currency, which is the US dollar. Just to maybe highlight that in May, it's going to be 50 years since we pegged our currency, and I think that's quite a remarkable achievement that we held on to this fixed exchange rate for so long. Now, that's not to say that we should seek to maintain that throughout life or for perpetuity, but the situations must be examined based on whatever context is emerging, and we must always reflect on that. So we're not doing the sexy thing as we might be doing in inflation targeting, but we simply have a focus then on how do we support fiscal credibility, as the need for us to maintain this fixed exchange rate regime is built on how we maintain and accumulate international reserves. And through that approach, exchange rate stability is one of those things that
that, you know, whenever there are any vulnerabilities or any weaknesses in the financial system, that actually constrains the degree of freedom that monetary policy has. It not only constrains it, but it also limits the effectiveness of monetary policy. For example, if you have a banking system whose credit portfolio is under stress, then we may want to tighten, we may want to raise interest rates, but banks may not, would definitely not follow us because they are worried about the quality of their loan books. So these stresses undermine the effectiveness of monetary policy. So what we have to do constantly is to ensure that the financial system is actually resilient to absorb the swings in the economy, to absorb shocks, including interest rate shocks. So that's why we do constant stress testing of balance sheets of individual institutions and of the system as a whole, not only of banks, but we also have to do it for securities dealers and insurance companies as well. So we can get a sense as to their ability to absorb shocks. And this is why we continue to stress that it's important that we build sufficient buffer in the financial system. The good thing for Jamaica, though, is that we really have not had a significant challenge in this area. The regulators working with the financial institutions have been able to build sufficient buffers within the financial sector. The capital adequacy ratio in the banking sector, for example, is about 14 to 15%, well above the benchmark. In the securities dealer sector, it's around 22%, again, significantly above the benchmark. Yes, when we were tightening monetary policy, some institutions, recorded fair value losses, but they were able to adequately and effectively manage those losses. And they've actually pretty much come out of that phase now. The other thing I should add, though, that helps in navigating this space is consistent fiscal policy, which is something that the government has been pursuing for many years now. And that just makes the job of monetary policy that much easier, because it means that we don't have to press as hard as we would have to if we had a loose fiscal policy.
Excellent. So I've gotten the 5-minute wrap-up. We can entertain a question, a quick, short question from the audience. Thank you, Keith.
One for each of you. Governor, the Belize capital market is quite underdeveloped. Do you see a specific opportunity to work with the Jamaica Stock Exchange and indeed the Jamaica financial system to drive Belize, which in my one trip there, which happened to coincide in 2004 when there was, which I did actually go to the central bank, courtesy of some people here actually, it seemed as though they are now on a real turnaround. So perhaps you can give us a little update on that. And a question for Wayne on monetary policy. Glad to hear you don't think the central bank knows everything. Perhaps you can expand on the thinking with respect to the post-Melissa response. I know you've already addressed it in the quarterly review, but I think you outlined some further thinking in your presentation here. Keith Collister, for this question, also the Jamaica Observer.
Thanks, Keith. Short, quick responses.
Sure. So I think you're in the mind of Mr. Morrison. The idea why he invited myself and the director of the Financial Services Commission is for us to gain exposure from where Jamaica Stock Exchange is, particularly how mature it is versus where Belize is in terms of its embryonic stage of development. A little bit of context, the central bank was the one to push and draft the current securities legislation, which was passed into Act 2 years ago. Thereafter, it was handed over to the Financial Services Commission. I will not answer your question specifically, as I may steal the thunder from Mr. Haylock, who will be speaking tomorrow, and that's his jurisdiction. But yes, the simple answer is yes, there is opportunity.
All right, thanks, Keith. I see I have 1 minute to respond, and I could actually take the rest of the day to respond. But we've sort of maintain our focus, as I indicated earlier, on our primary mandate, price stability. The fact is, if inflation gets out of control following this shock, the recovery in the economy will be impacted, will be impeded, because we'll be getting back into a scenario where there's yet an additional element of uncertainty in the economy, and that is inflation. That's not what we want. Now, as I said, we can't do anything about the fact that tomato prices have doubled. But what we focus on, though, is the second round impact. How those initial shocks are translating to movements in other areas of prices, in other goods and services. And that is what we try to manage.
There you have it, ladies and gentlemen. Please join me in thanking our two panelists this morning. And I also want to thank you for your attention. Thank you to the Stock Exchange for this opportunity, and also to our sponsors. They're here for the entire conference, so you can lay hands on them. Thank you very much. Spiritually only. And I believe, I'll hand back.
Thank you very much, Dr. Indiana Minto Coy, and of course, thank you to Kareem Michael, Governor of the Central Bank of Belize, and to Dr. Wayne Robinson, Senior Deputy Governor, Bank of Jamaica. I was particularly want to just follow up on something that Keith Collister said about being honest. You know, the central bank admitting, just like any other organization, you don't know everything. And that's the beginning of knowledge. I tell you what I know for sure. You guys need a break. So just about here, before we move into our next session, Jeffrey's commitment to the Caribbean, we're going to take a 10-minute break. We're going to shorten the break so that you can refresh yourselves, stretch your legs, and I promise I'll be back here in 10 minutes, and I'd love to see your faces at that time, all right? So we break for 10 minutes, and we'll be back with our next session. Thank you.
Mind in knowing that your hard-earned money is protected by the JDIC. That's right, the JDIC through the Deposit Insurance Scheme guarantees up to $1.2 million of your deposits in commercial banks, merchant banks, and building societies. This means your deposits, such as your savings and checking accounts, are covered. Rest easy, knowing that your deposits are secure. Your deposits always protected. For more information, follow us on Facebook, Instagram, and Twitter at JDICJAM, or visit our website at www.jdic.org.
JDIC, protecting deposits for you and me.
been watching live coverage from day 2 of the JSE's Regional Investments and Capital Markets Conference. This morning's session focused on government priorities to deepen capital market development. You heard from NCB Capital Markets CEO Angus Young, and the session was featured by the Minister of Finance and the Public Service, the Honorable Fable Williams. Join us again tomorrow at 9 a.m. for more insights and deep conversations as we continue with our conference. I'm Rochelle Moncrief, reporting from the Pegasus Hotel for day 2 of the JSE conference. See you again tomorrow.
Here we go.
Well, you know what, ladies and gentlemen, that was a wonderful job just now of introducing the panel and the speaker. So it leaves me nothing else to do but simply to invite Mr. Pagano to the stage. And as he comes, Mr. Michael Pagano is the co-head of Jefferies Global Wealth Management. At the last session, I ended by thanking our sponsors. And it's not a coincidence that after the JSE, on the cover of the booklet, there's Jefferies. And so I will step out of the way and allow Mr. Pagano to deliver his presentation. Thank you.
Good mid-morning, I think it is. Thank you very much for allowing me to be here. Thank you for all the recognition you give my colleague Greg. I'll never hear the end of it. Let me begin by, of course, thanking Mr. Stephen Whittingham, Chairman, and Mr. Livingstone Morrison, CEO of Jamaica Stock Exchange. It's not you, it's me. Honored dignitaries and guests, all protocols, of course, acknowledged. One small call out, Rianne, Ruel, and Jerome, please put up your hands, or where they're over there. Everyone turn and stare. 3 students of Indiana's at MSBM. Thanks for being here, and we'll be happy to take your questions privately. It's, as I mentioned, an honor to be here today representing Jefferies as a primary sponsor for the 11th year, alongside my colleagues and friends, Greg Fisher, Matt Kennedy, not here from Greg's group, and also not happy about it, our native son and daughter of Jamaica, Sean Newman and Rosie White Sewell, Trinidadian Nalene Smith, and also Ilana Block. Many, it seems like most of you know Greg, who's been in Jamaica for 39 years. And the question that doesn't seem to come up in polite circles is, how old is he? I'm just kidding. I know how old he is. And you look great for a man of your advancing years. Half of my group's revenue comes from outside the US in our wealth group and our investment advisory. That's very unusual for a firm like ours in the US. Perhaps 90% of that revenue is with clients in the Caribbean and LATAM, not Europe, not Asia. To deepen our focus even further, we've just added another executive with extraordinary experience of 30 years, Alessandro Parise, and you'll see him regularly because he has a heck of a charge to help Greg grow and help the others grow in the Caribbean. I've been with Jefferies 3 years. At my prior firms, we didn't have a presence in the Caribbean, so my perceptions were pretty much shaped, as you'd expect, as a tourist and as a guest. Shaped by gracious Jamaicans in Los Angeles and New York, by great food and music, by astonishingly fast athletes on television, and even by a bobsled team once upon a time. I was incredibly young then, of course, so I barely remember. So I joined Jefferies, and I was here for about 5 minutes and a cup of coffee, it seemed, and Greg says, let's go to Guyana and meet clients. So I had to become a quick study on the Caribbean in a hurry. Upon first meetings there, I figure out, gosh, everybody has a CFA, everybody has an advanced degree. For those young students, you can't go wrong with a CFA in any walk of life. It's an extraordinary accomplishment. The quality of the conversation and the quality of particularly the young people in the room was just extraordinary. And when I shared that with Greg, he said, yep, get used to it. And I have. Fast forward over the last 3 years. This past August, I attend Jamaica's independence in New York. That was a heck of a party. For those that were there, there you go. That room was dressed considerably better than all of you, I'll share. But it was a wonderful display of identity, pride, enthusiasm, love, community. And it was wonderful to go from the normal business environment to that for me. From one extreme to the other, unfortunately, Greg was gracious enough to include me at the funeral service of Consul General Alcyon Roach Wilson last month to celebrate the life of an extraordinary Jamaican woman. Once again, pride, community, love. It was an extraordinary few hours. I'll not forget it. So to stand here now is truly a treat, and to be with a firm that has demonstrated this much commitment and consistency is also quite special. To summarize my observations, which lead to why we will continue to be in the Caribbean, why we love it, it comes in 3 parts. First, widen out a little bit with the Caribbean. The economic conversation is fully mature. Sometimes it might not feel like it when you're in it, but I get a chance to see a lot of different markets, a lot of different communities, and the conversation here is as sophisticated as anywhere that I go. The policy sophistication, the conversation last night that the PM mentioned about speed, this is all present, and it seems to have the right strategic balance between how do you worry about long-term, and then you have to have near-term flexibility, particularly here. Everyone here and in the meetings we've had speaks with the same pragmatic language about debt sustainability, about fiscal and monetary policy, about digital advancements, about security, about the right level of regulation. The list goes on. Not to mention what Mr. Young spoke about last night. I mean, these are all real now concerns that we didn't have 2 years ago, but we have to incorporate them into how we think. More pressing here than anywhere in the world, perhaps also climate finance. CARICOM, I haven't heard CARICOM mentioned much, but I got exposed to it a little bit. among its roles to promote dialogue around trade, policy, regulation, collaboration, create shared responses to regional challenges. That brings scale, and scale matters in the world we're in now. For those of us in capital markets and financial services, this coordination is great to see. It brings confidence. And we don't believe that standards in every market have to be exactly the same. But having some ability to share best practices, having some harmonization of it is extraordinarily helpful. The differences between countries or between markets can be well argued, and when they're intentional and when they're purposeful and when they're well argued, it leads to adaptation. When they're not, when the argument comes from a position of dogma or pure emotion, it's just market fragmentation, which is a word of inefficiency. So what we see and what I've been privileged to see is the Caribbean is continuously more investable, not less, as it takes on increasingly durable institutional qualities. Jamaica, as everyone here knows, and any American in the room knows, Jamaica punches above its weight, particularly culturally, but now also economically. Banking capital markets members, along with this exchange, have earned accolades internationally. I mean, that's extraordinary. From a distance and from seeing it now